Let's welcome in a special guest from the life insurance sector. Vibha Padalkar, MD and CEO at HDFC Life is with us. Ma'am, thank you so much for taking out time for us. Could you just start by saying that, within the private sector, you've reported a robust average premium growth for November. What contributed to this revival after 2 months of slight slowdown?
See, actually, month-on-month growth for a sector like insurance is too short a time frame. So, one at least at the very minimum we need to look at it on an annual basis, and it has been tracking well. It's a combination of factors for the sector. I think the most important factor is the decoupling from only investment-led products to a full bouquet of products, especially in the protection space, and it has seen a little bit of a defensive offering as well in terms of financial savings options, and it is that holistic bouquet that is beginning to pan well for the industry.
Can you talk about the penetration levels which remain low for the sector? The real benefit of life insurance are clouded by less important objectives. What can be done to increase this penetration?
So several things there. One is the obvious ones in terms of a separate tax carve-out, especially to the pension in the pension sector, similar to what has been done, for example, for the NPS product, because worldwide insurance does require that little bit of nudge before an individual realizes the need for it. So ATC today is very much crowded, and so even if it's a 50,000 carve-out, that would help a lot. Another aspect is to see how one can solve for things like Aadhaar. Yes, it is in the pipeline, but it has taken quite a while. We have lost out on time just with this back and forth on ability for us to use Aadhaar, because all the online transactions and transactions through new ecosystem partners like we have over 40 new ecosystem partners, becomes incredibly easier if we are allowed to use Aadhaar. Another aspect is to use, if we could have a unified KYC, wherein all financial services products, one individual has to give his or her KYC only once. That could help in a very meaningful way. And also another one which could make a big difference as far as retirement solutions are concerned is not taxing annuity twice. Today it is not really equitable that annuity is purchased from post tax savings of a salaried individual, for example, and again he gets taxed when he receives the annuity, and more so he gets taxed when he has retired and really in need for money. So how can one at least eliminate the fact that this double taxation is happening? So a whole host of things that are possible, some small, some large, more in terms of structural changes, which could really help the insurance industry leapfrog in terms of growth very significantly.
Okay, digital platforms, Vibha, disrupting the way businesses are being done. So given this context, do you see the online model as a distribution channel? Do you see its share rising in the overall distribution mix?
Absolutely. So online, especially in terms of younger population, so population below 45 years of age, is certainly the go-to now way of transacting. And if you look at our own data, our direct channel today is 21% in H1 of this year, and this has grown from about 15-16% just last year. So this is the kind of growth that we see in direct channel, and within direct channel, of the 21%, about half is contributed by online modes of transaction, and that is the kind of trajectory that we are seeing. And we have been, over the past 5 years, we have a CAGR of almost doubling each year. So that's the kind of opportunity. Another aspect of digital transactions is in the new ecosystem partners, like I talked about, and all our tie-ups with various partners in various ecosystems, digital ecosystems. So a Paytm or a Airtel, or with the cab aggregators, or with the healthcare providers. All of that is on the back of digital. Our pre-approved sum assured, even to our bricks and mortar customers, is on digital. So wherein we, with the use of analytics, we are able to tell them then that go onto your own either bank or NBFC's app, and there's an offer waiting for you, and just 3 clicks and you're on. So really this is a nascent beginning. We had our tech day last week just to showcase all the opportunities that are there, as well as where we have started using these in our day-to-day business.
All right. Now, there were reports of the government raising FDI to 74%. If this does happen, how do you see it impacting the industry as a whole, as well as your company specifically?
So first of all, any kind of relaxation like this is welcome. It just shows that the government is open to having alternate forms of investment as long as it is within the overall framework of corporate governance, and we know where the money is coming from. And especially the smaller companies, and we are 24 life insurance companies, so at least the smaller companies which might be somewhat later to the game, at least the bottom 15, in all probability do require growth capital, and this is where it could be very meaningful for them, wherein their foreign JV partner can now, once this goes through, invest a lot more and provide that growth capital. For listed companies such as ours, again, in principle, we do welcome, but it is not as relevant for us.
What is your outlook as far as VNB and VNB margins are concerned for the coming quarters?
So in the first half of the year, the VNB growth has been very strong, of about 57%. The margins, as you know, have been industry-leading margins, and we will continue to beat industry in terms of delivering profitable growth. And you should see a smooth upward curve versus the 24.6% that we ended last year.
All right. Thanks so much for joining us, Vibha. Good to get an update on things as always.